Hello traders, Namaskar. Today is the 13th of June. Yes, 2022. It's a Monday early evening, late afternoon, 4:50 p.m. Indian Standard Time, and we had a difficult day for the Indian equity markets. Both the Nifty and the Bank Nifty gapped down, did not show any signs of meaningful bounce back towards the close. Yes, a little bit. But what's in store for us? This has damaged the short-term underlying trend of the market for sure. But what's in store for us? What can we expect tomorrow? And I would like to share my views on one particular large-cap auto stocks, which I think can lead the movement going forward. So come on, let's take a look at what happened to the markets today. So today I'll start with the Bank Nifty. Quite a big wide gap down. On a close-to-close basis, the index loses a little over 3%. 1,097 points is not a good day, definitely. And this fall brings the index back to its previous swing lows. This swing lows goes back to its earlier swing lows, and in terms of time, this is your March lows, and these two are close to the mid-May and late towards the end May lows, and here we are. What I kind of find disappointing is, and probably I'm repeating myself once more, is this particular move, which led a nice trend reversal, had a fake breakout kind of a intraday move. This was the Friday, I think. This was when I was in Rishikesh, 3rd of June, if I'm not mistaken. Yes, 3rd of June. And the follow-through reversal on the downside. So one more attempt from the market to reverse the trend on the upside kind of fails miserably. Levels and what can we expect? So number one, let's talk about the trend first. I like to think in that order. The trend has moved down. It has come back to supports. We can expect some supports close to that 33,000 round figure, may or may not hold. There's no sign from the short-term indicators of any kind of divergence, and neither does the Heikin-Ashi charts suggest any kind of immediate slowdown of selling. This does not mean that the market cannot fall. This does not necessarily mean that it cannot bounce back. Anything can happen, and price essentially is the ultimate factor. It has been a range expansion very clearly, so we can expect that yes, you've fallen 1,000 points in a day. So going forward for a day or two, you might slow down and try to hold yourself above that 33,000 mark. And this low was close to 32,200. This low is around 33,000. So maybe here you can find a little bit of slowdown. Let's take a look at the smaller time frame, the 75-minute time frame. I've dropped a volume profile, which clearly reflects that this is where the redistribution shaped up, and majority of the volumes in this fall has happened in this area. So not much of accumulation per se, or not much of volumes picking up per se towards the low. I would like to see some kind of a divergence playing out maybe later tomorrow for any kind of a bounce back. What will happen is the concept which is called the reversion to mean. Reversion to mean means that in this particular chart of mine, if you consider this moving average as my mean or average, then every time prices comes down away from that mean, it goes back to it. It reverts back to the mean. Now, two things happen. The means continuously approaches the price, and when the price goes away from the mean, it kinds of reverses back to them. So both the factors play a role. So I think sometime in the next 2 trading days, we might see a bit of slowdown and a reversion to mean. For the Bank Nifty, the bare minimum is it needs to take out today's high. Today's high is around 33,888, so you can use 34K. Bare minimum, take out that level and sustain above that level. But stronger resistance is very, very clearly 35K, 34K. 35K is far off, 34K is not very far off, but let's not expect that it's going to gain back 600-700 points within a day's time. Let's stay with the underlying downtrend now. Expect intraday volatility because downtrending markets are more volatile, and let's not create any kind of bullish bias. I strategically maintain a bullish bias till this point, a cautiously bullish bias till this point, but over the last 2 trading days, the kind of price movement we have noticed doesn't make sense. Only an investor can look to buy right now who would like to give his position time. So now he will get stocks at reasonable prices, relatively cheaper prices. A trader, I think, should focus now on the short side rather than on the long side. Nifty touches its previous swing lows. This low was of May 2022. This low is around 15,676, and today's low is 15,673. So just by 3 points, it teases its May lows and manages a little bit of short-term bounce back, but the story is still the same. Disappointing reversal, no signs of divergence between the price and the indicators. ATR expansion, range expansion, so similar. 75-minute time frame probably will attempt some bit of a reversal on the upside, and the level is 16K for the Nifty. And if together we drop a volume profile of this entire correction, then you would see close to 16,400. This zone, this range is going to act as the important resistance. If we see a surprise element from the bulls, if we see a surprise V-shaped recovery from here on, then any movement from here on will definitely face some definite serious resistance towards 16,300, 16,400. So strategically looking at the price and going by the flow of the market, short-term traders should focus more on the short side, look to sell on the rise. Contrarian traders can participate, but I wouldn't suggest so, because in this kind of markets, contrarian trades might fail miserably. So strategically, from a short-term point of view, bearish, wait for the bounce back, a reversion to mean, and if it fails to hold, then we can look to go short. One thing is very important, and I will discuss this at length towards the end of this week, is thanks to this fall, this recent fall, very important, crucial long-term levels are now getting threatened. And if these kind of levels are broken, then some bit of space opens up, a gate opens up for the prices to fall further. This is the weekly chart, but it's too early to comment. It's not exactly too early, but it's Monday. We have 4 more days this week to finish the weekly bar. So from that point of view, a little early to comment on this. But we've seen the index kind of underperforming, and it's been down, I think, around 15%. If you draw a info line from the all-time highs to the lows of this and this, today's low is more or less same for Nifty, you'll find around 15.89, 16% correction for the equity benchmark. Nifty is not a bad fall at all. It's taken quite a bit of time. So yes, the long-term charts are getting a little tensed with this fall. Now, none of the top 15 stocks of Nifty 50 managed any kind of a show of strength. You can say the only 3 stocks which managed to fall less than 1% was Hindustan Unilever, Bharti Airtel and Maruti. And as you can see that I've marked Maruti with a green note there, because I can clearly notice that this guy is showing some sign of relative strength. I think I did mention this counter in my weekly video, if my memory serves me right, but clearly it didn't fall that much at all today. It is holding itself up. It has gone through 5 days of a rally. It has clear signs of resistances which it needs to clear off, and these are some important resistances. When important levels are taken out, it opens up important moves also. So We know, number one, that the CNX Auto is still in an uptrend. We know that CNX Auto is outperforming the overall market. Within the CNX Auto, Maruti definitely is an important stock, which has given us a recent 5-day rally, and today it has consolidated that rally. If we take a look at the volume profile of this particular fall, and I want to go here because this is more like a consolidation, you'll see that these levels where we can see the resistances playing out, these levels, volumes were not that great. Actually, it's this low, I think, which is playing out more important than the volumes. So a pretty well-defined, sustained breakout above 8100 can open up some good upsides, maybe towards 8600, but it needs to break above 8100 and stay above that for this kind of a movement to play out. I always like to talk about the flip side, that if I'm anticipating this, then what can happen where, in my view, reverses. And so, of course, I can see that the recent consolidation is this. So any kind of a flip fall below 7740, 7700, of course, kind of negates the setup. Pattern traders can also say that, come on, how can I look to be bullish on this particular chart, because it's kind of creating a head and shoulder top kind of a pattern. Yes, it does not have too much of an uptrend, number one, and there's not much symmetry between the left shoulder and the right shoulder. The left shoulder is more or less 1, 2, 3, 4 bars, and the right shoulder is already 6 bars. So the symmetry is a little missing here. I don't know, let's see. But if the market bounces back, when the market shows some strength, if CNX Auto maintains to hold on to its strength and uptrend, if this counter does not slip below 7700, then you can put an alert at 8100 and wait that whether we get this this breakout from this important auto stock or not. I'll anyways update you as I make these daily videos for you. Thank you for watching my work and supporting me. Let me know of your thoughts. How are you dealing with this market? And what are the levels you're working with? Till then, do take care of yourselves. Trade well and trade wise.